Good afternoon this Tuesday, September 20th, tomorrow, first day of fall. Well, grain futures, wheat specifically, down 40 cents yesterday at one time, then exploding near the 70-cent limit today at one moment, closing with super gains of over 60 cents on the day. And of course, led by the story this morning that President Putin of Russia announced around our day session opening for grains that he was going to call for a referendum in the areas that they control in Ukraine to vote for themselves whether they'd be like to be part of Russia. Now, this kind of changes the game a little bit. And of course, the initial reaction to the grains today is of, oh no grain's going to come out of Ukraine. The war is going to escalate. And this could be the end of the safe grain corridor. Well, the safe grain corridor could be coming to an end, but the war could also be coming to an end. So think this through. What Putin is doing is giving up maybe the fight of trying to take over Kiev because of the proxy war. He's actually fighting the U.S. military might, and so it's hard for him to push beyond where he's at with all our anti-aircraft capabilities that we're giving the U.S. to Ukraine, as well as their anti-tank weaponry that slows down Russia. So he has a chance to show a prize, gain a prize, by having the four main areas of the eastern portion of Ukraine vote for referendum if they want to be part of Russia. Well, these are Russian people, Russian-speaking people in eastern Ukraine. This is why there's been separatist fighting going on since 2014 when they ejected the Russian-friendly president at the time of Ukraine through the CIA and the overthrow they created. This area has hated Ukraine. And so this gives them an opportunity to voice their opinion. The question is, will the country of Ukraine, and more importantly, Kiev and the CIA and the Western European powers, will they accept the vote of these people? That's where the catch is. Well, if they vote to secede from Russia, Putin can claim a prize, end the war, saying he set out with his special military operations to move in to protect these areas that were claiming their independence. Well, in this independence, they now have a chance to vote and be part of Russia. War ends, or does it? Because if Ukraine continues to fire upon Russia, now it's not a special military operation on Russia's part. Russia will declare war on Ukraine for firing upon its now sovereign ground of Donetsk, and that this would be paramount for him to now bring people from the Russian civilian population into the military, conscript them, and make them fight now in Ukraine and bring about other nasty deeds that they can do in Ukraine. And that is actually take out power grids and use dirty bombs, so to speak, tactical nuclear weapons. That would change the face. But we could have this war ending if Putin is satisfied with the vote, as long as it goes Putin's way, allows him to annex those areas they control. So let's go take a look at a map. So the red area on this map denotes the areas of Ukraine that Russia has pretty much taken control of and, should I say, owns, okay? And the rest of Ukraine is still fighting, trying to push back to the east. Well, if these areas, Donetsk and Luhansk, these whole areas give up and vote to be Russian, what would be argued is, do the areas that they occupy get the whole stated region of the vote? This would change your lines more like this would be part of Russia. And that is the catch, how they control this. And so with Mykolaiv, they've crossed the areas of the river. Odessa's over here. But do they get areas of Mykolaiv? How's the vote going to work? That's where the argument could come into be, because this could actually be the new Western Front of Russia if they do it by vote and areas that they have pushed into. So that's the interesting part about this, and this will evolve quickly because supposedly the vote would come sometime next week. So here's what it did to the marketplace. Of course, we've noted, this wheat chart, went positive, and then they hammered into it yesterday on a closing basis. I stated in yesterday's newsletter, if they close below that low, this opens up a retest of the lower area. Well, there was nothing doing on that. We opened last night, firmed up, and then exploded today. Same thing goes with Kansas City. Went into some serious moving average support. We noted a close under that level would be terrible and dictate further action. Well, it didn't close under there. We pushed higher again to new recovery highs since this congestion got underway for essentially 2 months. And now that seasonal tendency for wheat starts this here week and could move higher. If we do move higher, let's go to our 6-hour continuation chart. Again, we can see how vicious, how typically we've been banging this moving average. And again, yesterday, holding. I have to laugh. Yesterday, before we bought corn, I considered buying Kansas City wheat, thinking, well, it really shouldn't drop much farther. But I couldn't invent a story that would make us money today. And I didn't have the notes from Putin of what he was going to do today. So Fibonacci-wise, last week's high was at the 25% retracement of the May high tagged to the August low. And now the next target will be just over $10 Kansas City, 38% retracement. We do have to look at this as a bearish market, so it's a bearish recovery. So 38% are doable. And so the prospects is we could run Kansas City wheat another 60 cents higher here to this $10.20 range, and send Chicago wheat probably yet to $9.40 to the $9.60 range. Something to watch for, and this is the setup. Otherwise, breakback support again comes in at that 910 level down to yesterday's low at 896. Notice the higher rising lows. You don't want to lose that. And so we would be anticipating seasonals are now in place, so it helps wheat push higher until we figure out what's going on with Ukraine. Corn bumped higher, but harvest is getting underway. We had been anticipating a bounce would occur after last week's high. We've called it a B, C potential correction. The prospects for the rally today we had thought could potentially make it to 786. Didn't think it would, but it did. And of course, unlike wheat, corn and beans came off into the close. And so we'll see how this plays out politically. We have the Federal Reserve tomorrow raising interest rates. What's it going to do to the dollar? Our exports are not what they should be. We have harvest underway. So this B wave could be holding, and the question is, what's the extent of our wave C? What kind of a pullback will we get for a wave 4 correction? Maybe we just pull back again, hold trend line, and rally again into the October crop report. Or we do head to moving average support and do a typical ABC correction. We'll see how that plays out. We're just aware of we had a rally coming. That rally came. We sold some more corn on the March contract today. Also in beans, we made a sale, our first 2023 of sale in beans for November beans 2023 at the $13.84 range. Now beans, 2-day bounce into a wave 2 we were anticipating. The question is, how strong is this wave 2 going to be? Thought maybe it would hold under the 62% retracement, but they went right up into the box, as we would call it. And so theoretically, if this is a high, and this is our wave 2 high as we project, so if this was our high, this is our wave 2 bounce. China not buying the beans like they should. The prospects of more bean sales out of South America with our strong dollar circumventing us as they clean up the rest of their old crop could set up our wave 3 setback. We'll see. That's just how the charts play it out right now. What changes it until it turns it bullish? Trading above 1508 and closing above it pretty much changes the dynamics of all these charts, and then it takes this as just another bull market setback, and now we're counting upward bullish waves. But for now, we're still looking at it as a bearish spin. Don't forget in all this, you have the U.S. dollar. Mr. U.S. dollar outside day up today, which implies more strength in tomorrow. Tomorrow's a Federal Reserve day. Will we or won't we close above the 78% retracement high we made at 110.79 here earlier in the month? If we start closing above this value, it just implies we're heading to even stronger levels not seen since 2001, and that does not help us export our ag commodities. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.